Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 29, 2014. Now you're looking at a chart. This is a daily chart of the S&P 500 or the SPX. Normally I show the SPY, but there's a reason why. I just wanted to point out that we're at 2090 and change. And I have to think that just from a common sense perspective, right? And this is common sense market analysis. Common sense tells me that by the end of the year, which is really Wednesday, that they're going to push the S&P to 2100. I don't know if it's going to happen, but to me, it makes sense that we finish the year at a big round number or slightly above 2100. It's only 10 points away. It feels like they want to get there, and it would make everybody feel very, very positive, very, very good into the end of the year. So today, the S&P was up only $1.80, and the Dow was down 15 points, and the NASDAQ was basically flat. But you know what? It just feels like over the next 2 days, they're going to push the S&P up about 10 points or so, and that's just what it feels like to me. I don't know anything. I don't know that it's going to happen. It's just common sense tells me that it looks like it's going to happen. For nothing other than just to talk about it, I thought it would be worth mentioning today. So, this is another slow week, just like last week with the holidays, this week with New Year's and Wednesday being the end of the year. What you're seeing now is you're seeing squaring up of positions. You're seeing mutual funds and hedge funds and all that kind of stuff. What you're seeing them do, you're not seeing it, but what they are doing is they're squaring their books up. They are, number one, what's called, window dressing, and window dressing really works both ways, right? So a mutual fund, if Apple is one of the better performers, for example, okay, in the market, right? They want to show their fund holders, okay, their customers, that they've held Apple and they've participated in the up move in Apple. They don't want to feel like an idiot and be out of Apple while Apple went from a low price. Well, let's just look at Apple and I'll show you the example, okay? So they want to make sure that the folks that are holding their mutual funds participated in Apple. This is a daily. Let's go to the weekly chart. All right. Look where Apple went. They want to show that they've held Apple from, like let's say $70 or $75 up to $115. While they might have only held it for 2 or 3 weeks, they might have held it for 6 months, they might have held it for 10 years. Who knows? But the point is they want to show that they held Apple while Apple was going up, while Google was going up, while some other stocks were going up. And by the way, on the flip side of that, window dressing works in reverse as well, where they want to get rid of some of the losers, namely a lot of the oil stocks, right? So let's say, for example, what's a oil stock that was really a poor performer? Let's say, let's just look at Halliburton, for example, okay? So Halliburton, all right, went from 70 change, almost $75, all the way down to $40. They don't want to look like fools and have ridden a stock that got cut almost in half, okay, or at the low did get cut in half from the high, right? So they want to make sure that they look good to the folks that are holding their funds when they report what their holdings are after the year closes, which is also the end of the quarter. Okay, so that's what's going on now, and that's why you don't see me putting out during the holiday season, and I'll never put out during the holiday season like now, a lot of trades, because a lot of funny business goes on, and we don't want to get caught up in that. Sure, there are a little bit of trades to be had, and we had some long plays when the market sold off. Let's go back to the SPY and talk about some real stuff. Okay, so we had some long trades down here that worked out. We had Boeing and stuff like that, and that's fine. But right now, we're going to be patient, and we're going to wait for the year to turn over to 2015. And then what we're going to do is we're going to see how the market performs. And my indication, okay, now here's where we get into the real stuff. My indication is that we're going to see the market continue to float up into the end of the year, or at least sideways, okay, unless something catastrophic happens. And then in the first week of January, we'll probably see more of the same. But I don't anticipate taking a lot of long trades in the beginning of January. What I'm looking for, since the market was on an upswing from here, okay, look at this. This was the October low, okay, from the low on the SPY was 182. Now we're at 208, almost 209. Okay, what we're going to look for come probably the second week of January is to pick up some short plays and watch for the market to pivot and fake everybody out and think that the market's going to go down. And it is going to go down for a while, but I don't think it's going to be a catastrophic down, but I think it's going to be enough to pick up some short plays. And we'll talk about that more over the next several days, and the members will see trade alerts to that effect. But we're going to see a January pivot, and that's going to give us a good idea of what's going to happen for the rest of the year. And I already have a pretty good map of what's going to happen throughout January, give or take, but I have some good pivot points lined up that I think are feasible. And so what I'm looking for is probably to pick up some short plays in probably towards the middle part of January, maybe even the end of the first week of January, and we'll see what they look like. We'll wait for the trade setups. We always say, let the trades come to us. We don't force our will on the market. We don't impose our will on the market. So that's what we're going to do. But because the market's been on such an upswing, even from that little sell-off, this is the weekly. Let's go back to the daily. Okay, over here, you'll remember I told you the market was going to sell off, and I told you it was going to go down here. Okay, so I said the first target was the 50. We went through that 50 period moving average. We went through that, and then I said the next target was here. So that was about 196.74, I think, or let's get the number again. 196.73, and we came to a low of 197.86. All right, so that's pretty close. In fact, that's close enough for me. So I was pretty good with that one. Missing it by a point or so I'm fine with that, right? We're never going to hit it spot on to the penny every time. Once in a while we do, but for the most part, we hit the sell-off, and then I told you the market was going to rally into the end of the year, and it did. Okay, so of course I'm not going to be right every time. This is a very humbling business, but what I'm telling you now is that we're going to look for another pullback in January, kind of like we saw here. It may even be deeper than that. We'll see what happens when we get there. So that's what I'm looking for, and that's why I want, even though it's a slow week and there's not a lot going on, we have to stay fresh. We have to stay alert to the markets. I want to make sure that everybody understands what I'm expecting so that you guys can expect the same thing. So now you know what I'm expecting. I'm expecting the market to float up from here, maybe even through the first week of January. I told you that back here, okay? I told you that in the beginning of December. We're going to look for a sell-off, then we're going to look for an up move into the first week or so of January, into January, I said, and I said it so many times. Go back and check the videos from early December, and you'll see exactly what I said. Exactly what I said happened, and I'm not doing it I told you so. I just want you to realize that this is hard work, and I work very hard to get this right, and I don't get it right every time, but I work hard for the benefit of my members and subscribers. So what I'm telling you now is what I'm expecting, and that's why I just wanted to let you know all those details. So being that there's not much else to discuss with the stock market right now, I've kind of given you everything I had right now up until the end of the year. Let's take a look at some for fun. Let's take a look at a chart pattern, and I'm going to give you something that I think may work out over the next couple of days. And whether you take the trade is totally up to you or not. I'm not giving it to the subscribers. I'm just telling you what this looks like to me. Seadrill, SDRL. Okay. So I want to explain the pattern I'm looking at. All right. So Seadrill got beaten to heck. Okay. Look where this was. Back here in September, Seadrill was about $37, right? Now it's $12, all right? So we know that most of the downside has been had. So I'm not looking for a short here by any means, but what I am looking for is a little pop to the long side. And you may not be able to see it exactly the way I see it, but I want to explain some of the patterns that I look at. And I think this is a good educational moment, right? So here's what we have. We have an up move, and then we basically have moved sideways for 1, 2, 3, 4, 5, 6, 7 days, okay? So this up move, and then 7 days of side. If you want to count the up move, that's 8 days of sideways movement, all right? So this tells me that the market is poised to go higher. Why? Because, and what I always say is you have to know where you're wrong also. So I'm going to tell you where we're right and where we're wrong. Where we're right is that the market's moving sideways after an up move. That's a bullish pattern. That's basically called a bull flag. This isn't exactly a bull flag pattern, but it's close to a bull flag pattern. And to me, it's a bullish pattern. Okay, so we had an up move and a sideways move, a pattern. Okay, so we have a sideways pattern. So what happens is I like these patterns because it tells me where I'm right and wrong. Where I'm right is that it looks like the market wants to go higher because it's been going sideways, kind of building, I even use the word pressure, if you will. So it's building this sideways move that looks like it wants to go higher. Well, what happens if it doesn't? How do you know where you're wrong? And where's a good risk-reward trade? Well, guess what? Okay, here's the deal. This low from this big up move here is at $11.18. And right now the stock's just over $12. Okay, $12 and let's say 5 cents. All right, that's on the close today. So what I would say is if I'm buying this stock or if I'm recommending it to subscribers for a trade alert, all right, I would say that it's poised to move higher. And how high? Well, it could probably move up into this area here at about 13 and a quarter. That would be my target. So that's a pretty good move from $12. $1 and a quarter on a $12 stock. I'll take that all day long, every day of the week. Where am I wrong is if we get a close on a daily basis below $11.18. That would mean that this pattern is failing or has failed on a close below $11.18. That's a pretty decent risk reward. It's not a great risk reward because it's still $1, almost $1 below where we are now. And on a percentage basis, it's probably about 7 or 8% if I'm just eyeballing it. I don't love that. I like a little bit lesser of a percentage, but it's still pretty good because, I would say a good risk reward trade is at least staying inside of 10 at maximum 15%, but I like 10%. So anything where I can minimize my risk or manage my risk inside of 10%, I'm going to look at that trade. So here we go. A close below $11.18, a failed pattern. If it continues sideways, I think it's going to move up, and I think we can look for about $13 to $13 and a quarter. I like 13 and a quarter on this trade right here. Right, this is the number I'm looking at. Okay, so if we can close above and catapult above, this red line is the 20-period moving average. That looks good to me. So what I wanted to do was just kind of explain to you my thought process on what I look for in identifying trades. So instead of giving this out to the members, because I really don't want to give out trade alerts in the end of the year because anything can happen, what I want you to do, and whether you take this trade or not is totally up to you. I have nothing to do with what you guys do with your own accounts. But what I want you to do is watch it and see how it plays out. So it's something to watch. I'm kind of teaching you one of the patterns that I look for in positive trades, meaning upward trades, good bullish looking trades. So watch this one for a few days, see what happens, and we'll kind of watch it over the next couple of days, and I'm going to make a note to report back to you on a daily basis what we see. Whether or not it's successful or it fails, we'll find out. But that's what I have on Seadrill for you guys today. So let's take a look at oil real quick, and then we'll look at the USO, and then we'll look at gold, and then we'll go about our business. So oil's still struggling, and what you have is oil seems to be floating up in the middle of the night in the Globex session overnight, and then it kind of sells off during the day. And what I think is happening is this is the time of the year. I think there's a lot of tax loss selling. So people that are trying to pick a bottom in oil say, forget it, I'll take my loss. Oil stocks are struggling a little bit. Some are okay, some are struggling. Some popped up in the day today, and then when in the middle of the day or the beginning of the day, and then when oil sold off, they kind of pulled back today. And what I'm seeing is just nothing positive in oil. So I just, until I see that reversal day that I keep talking about, there's nothing going on here. We just keep making new lows. And I got news for you. You can always make a new low. Things can go lower than we think they can, and they can always go higher than we think they can. So right now, there's no play here. So oil is struggling. Let's take a look at gold. And I know this is a longer video, but we're going to wrap soon. Gold, again, volatile. We still have higher lows. I'm still counting this as a higher low. It's a little suspect at this point, and we can certainly come down towards these lows again. Don't count that out. But nevertheless, in my book, in my work, in my analysis, gold is right now in a seasonally positive position, which means I expect higher prices, and I know that I've been telling you, or you should know that I've been telling you, that gold should go positive into 2015. Exactly when it makes the big move, we don't know, but we'll know it when we see it, right? We'll be able to hop on board when we see it if you're not on board already. But I'm accumulating, and I'm not afraid to accumulate because we are in a seasonally positive period for gold. Okay, so look for some up moves in gold. In fact, as I make this video right now, it's up in the Globex session at $1,186. It was a little less today. It's up about $4.50. And, we'll see what happens. I don't expect anything major to happen over the next 2 days before the end of the year, but certainly into 2015, I'm looking for positive things, higher prices in gold. And so there we are. And I know some of this sounds like a broken record, but the charts tell me what the charts tell me. My mathematics tells me what it tells me, and the patterns tell me what it tells me. So I just report it to you, and hopefully it's helpful. And we're going to leave it there tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.